Welcome everyone to Vested Interest. This is Shane back again for the stock pick of the day video. Today we're going to take a look at Humana. It is April 2nd. Hope you're having a great week. This is out of the healthcare sector. Let's jump right in. And if you are new to the channel or you just want to help me out, go ahead and hit that thumbs up down below if you find any value in the content. Hit the subscribe button. Make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Hit that notification bell so you're notified whenever we put out any new content. Go ahead and share with any investors that you might know out there. On this channel, we cover dividend growth investing, but this could be valuable for any investors out there that you might know. And drop a comment down below. Let me know what you think of the videos. I really do appreciate it. And doing that really does help out a small YouTube channel like me grow. It helps get the word out. Dividend growth investing, in my opinion, is the best way to reach financial freedom and eventually get off out of the rat race and off that hamster wheel we call the daily grind of work. Let's keep rolling here. This is the Vested Interest Stock Screener. This is how I look at a company on a high level to see if I'm interested in investing in it. If it meets my criteria, 5 of 8 or 6 of 9 if it's a financial company, then it goes into my potential investment pile, and then I do more of a deep dive into the financials. It's also how I run through these stock pick of the day videos. So we're going to cover this criteria here in the video. So let's keep rolling and take a look at Humana. And if you want to know more about this company, check them out at www.humana.com. That's www.humana. And it is a healthcare company. They provide healthcare services, Medicare, dental, vision, Medicaid, right? Your company might provide healthcare. This might be one of the providers that they use. Personally, I will give you some personal information about myself. I work for an insurance company that provides a lot of similar products. Our company happens to have a cross and shield that's blue, so that should give you an idea who it is. Now, I do not work in the insurance side. I'm in the construction management side, so I build out their space, remodels, new buildings if we build any, remodel existing buildings, that type of thing is what I do. But I do work for an insurance company like Humana, and so this would be one of our competitors, right? Health is at the core of everything we do. Since 1961, Humana has been committed to helping people live healthy and happy. Our approach is simple: offer personalized care from people who care. We do this by listening to our members and creating solutions to help them reach the best version of themselves. We're also deeply invested in towns and cities across the country, and we strive to support and improve communities at a local level, right? Sounds very similar to what the company I work for does on a daily basis, right? Calling and providing you with your Medicare, dental, vision, Medicaid, healthcare plans overall. And then answering any questions you have along the lines whenever you go through billing, whenever you have any issues with your coverage, want to adjust your coverage, that sort of thing. That's what they're doing. You know, what prescriptions you're covered, that sort of thing. So the reason we're taking a look at them, down 13.46% on the day, huge drop. We are talking about Humana Inc, ticker HUM, out of the healthcare sector, closed out the day at $304.13. And you can see that drop throughout the day. Right around 10 o'clock, it looked like they tried to rebound a bit, but then right back to a sell-off, and maybe rebounded a bit into the close here. But overall, like I said, just a pretty nice slope down here. 52-week range as low as $299.23, as high as $541.21. So with today's drop, they are right up against their 52-week low, right? $299 low, so they're about $5 off their $4 and some change off their 52-week low. So you're getting them at their 52-week low or pretty close to it here at these prices. Market cap of $36.776 billion, a beta of 0.45. So they are typically less volatile than the overall market, though you can see quite a bit of volatility throughout today. PE ratio, price to earnings ratio at $15.25 per share. That is low for a company this size, so I like that. Mid-teens is where I like companies. That's a good price to earnings, in my opinion. Earnings per share, EPS, sitting at $20 per share. That's very nice. Earnings date is coming up April 24th. For dividend is $3.54. They are quarterly payers, so divide by 4, or just give us a minute. We're going to cover that here, what they pay out per share on a quarterly basis in the last slide. Now, the yield is low, 1.01%. That is a low yield, so it's typically lower than what I like to get into. It is lower than the overall market. If you were to buy a ETF like VTI or VOO, that's even lower than you're going to get from them. But if they're growing pretty fast, that might not be a deal breaker, especially for some of you who may be younger investors who are looking for more on the growth side. But we'll have to see how fast they're growing, if that's worth jumping into, but it is lower than I typically look at. Ex-dividend date, March 27th, so we just passed that here last week. Looks like they're going to pay out on April 26th towards the end of the month. So if you owned them on March 26th or before, you will get the next dividend payout. If you were to buy them now, you're going to have to wait a few months to get that next payout. 1-year target, at least according to Yahoo Finance, where I pulled this information from $408.44. So they see about $104 in upside on this one over the next calendar year. Again, that's just their projection. Doesn't mean it's going to happen. Now let's jump over here. We're going to look at if you were to go over here to the left on Yahoo Finance page, you'd see a tab called Statistics. You'd go into Statistics. You look at dividends and splits. We're going to look at the dividend yield average or dividend yield theory to see if this one is potentially undervalued. To do that, you look at the 5-year dividend yield average, 0.67%. You compare it to its current 1.01%, or over here where it says forward annual dividend 1.01%, same number. And since it is higher, that speaks to potential undervaluation on this one according to dividend yield theory. Now, that gives you a bit of a margin of safety on this one as well. And again, it is right up against its 52-week low. So it's not going to drop much lower unless it busts through this 52-week low, and then it's probably really going to drop at that point. But it does look like attractive pricing currently where it currently sits, at least according to dividend yield theory. Payout ratio is very low on this one, 17.7%. So even though the dividend yield is low, if it's growing fast, it has a lot of runway to increase this dividend. That's a very low payout ratio, 17.7%. I like 75% or less. So this is much, much lower than I want. That gives them a lot of free cash flow to raise dividends, pay down debt, reinvest back into the company, make acquisitions. So very, very good payout ratio on this one. Now let's take a look at free cash flow. We want growing free cash flow. Typically, if a company has growing free cash flow, they have growing dividends to match. So we went back to 2020 here. We see 4.6 billion. Now a huge drop in 2021, down to 920 million. 2022 back up to 3.4 billion, but then another drop in 2023, 2.9 billion. So they are a bit cyclical here, and you can see they are repurchasing their own shares, which I do like when companies do that, though I would not say the share repurchase accounts for the drop in 2021. Now we know what was going on during 2020 and 2021. You had the CV-19, the COVID stuff that was going on. So a lot of companies, including the one I work for, got hit paying out a lot of claims and a lot of health issues around CV-19. So that one I can kind of get around. The drop from 2022 to 2023, that's a different story. And again, I don't think that the repurchase of capital shares accounts for the drop here. So you were repurchasing over 2 million shares in 2022 and only 1.5 in 2023. Plus you had a almost 500 million drop in free cash flow. So a little concerning on this one. I'd like to see more or better, more consistent free cash flow growth. Overall, I'm seeing from 2020 to 2023 a decrease in free cash flow. So that's not good to see. Would be something to watch if you are invested in or interested in investing in this company. Now let's jump over to stockanalysis.com. This is another site that I like. You pick any sites that you want. Just make sure you're picking more than one, looking at more than one site to get at your information so you make sure that it is accurate and up to date. That is the idea behind looking at more than one site. It's not just so that I can push these sites. I don't get any kickbacks for them. I'm not affiliated with them at all. So just any sites that you want, just make sure you're not just blindly trusting the information from one sole source, right? Now, they have 18 analysts that have taken a look at this. They call it a consensus buy. They have a low estimate of $310. It currently sits 1.75% below their lowest estimate. They have an average estimate of $468.94. That's even above what Yahoo Finance had it at. That would be a 53.92% increase from where it currently sits. And they have a high estimate of $630. That would be a 106.78% increase from where it currently sits. All the while, you could collect that around 1% dividend yield. Now let's jump over and look at how financially efficient the company is running itself. I like 10% or better for return on equity and return on invested capital. Now return on equity on this one sitting at just over that 10%. I like it 14.9%, so good there. Return on invested capital sitting at 10.63, above the 10% I'm looking for there. So far all the numbers look good. Now let's take a look at EPS, earnings per share growth. I like 5% or better. Now this is smoking high, 24.97% projected over the next 5 years. So not only does it have a relatively low PE, around 15, it is projected to grow its earnings per share growth, which is already high at $20 per share, 24.97%. That is extremely high. Revenue growth, same thing. Projected to be 10.2 double-digit revenue growth, 10.24% revenue growth projected over the next 5 years. Even if they were to hit half of that, that's really good revenue growth, in my opinion, for a company this size. So good numbers overall. The only thing that's a little concerning to me is the free cash flow growth. I'd like to see a little bit more free cash flow growth, though even with some up and down free cash flow growth, their payout ratio is very low. Now let's take a look at the dividend again real quick here. Again, quarterly payout ratio 17.7. I think they said 12% on Yahoo Finance. Either way, under 20% is just very low. Extremely low payout ratio. Dividend growth is 9%. So not quite double digits, but high single digits. That's very nice dividend growth at 9%, especially with a low payout ratio. If they were to continue that for 10, 15 years, that would be extremely high dividend growth overall. That's almost double what my portfolio's dividend growth is. So very nice dividend growth in my opinion. Growth has only been going for 7 years, right? But that's all right. Nice heavy dividend growth with a low payout ratio. 7 years of growth. If they continue, like I said, for the next 10 to 20 years, this will be a nice dividend growth company right here. Buyback yield 2.76%, shareholder yield 3.92%. So you're getting good shareholder yield, you're getting good buyback yield as they buy back the shares. And going back to September 29, 2021, they were paying 70 cents. March 30th, 2022, they were paying 78 cents and some fractions of a penny over here. March 30th, 2023, they jumped it up to 88 cents and some fractions of a penny. They didn't jump it up, so it looks like, yep, March there, March here. Now, they didn't jump it up in March of 2024, so hopefully, it doesn't look like they're going to jump it up in this April payout. Hopefully, their next payout, they jump it up, and we'll see if they continue that dividend growth through this year. Well, that is Humana. That's really it for this one. Let me know what you think in the comment section down below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Hopefully, you've started your own investing journey as well. If you have not, go ahead and let me know down in the comment section what is keeping you from starting your investment journey. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Humana you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below. I'll try to work it into the rotation. I do not cover tobacco stocks, and I do not cover non-dividend stocks. So please keep it to non-tobacco stocks and dividend growth stocks. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I will only share my opinion and invest in your for educational and entertainment purposes. Investing involves risk and can't money. Should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel or certified financial advisor.